Imagine you have $1,000 today. If you simply leave that money in a drawer, there's a good chance that, a few years from now, it won't be able to buy the same things it can buy today. In other words, your money has lost some of its value. Now, imagine that instead of leaving that money untouched, some people put it into a place where it has the potential to grow or generate income. That place is called the financial market. But what exactly is a financial market? Who takes part in it? Why are billions of dollars traded there every single day? And is it only for traders? By the end of this video, you'll understand all of these concepts in a simple and easy-to-follow way, without any complicated financial terms. When people hear the words financial market, they often imagine complicated charts, endless numbers, and professional traders buying and selling all day long. But the truth is, the financial market is much simpler than it seems. Once you understand the basic idea, learning about the stock market, Forex, cryptocurrencies, and investing becomes much easier. So let's start from the very beginning. What is a financial market? In the simplest possible terms, a financial market is a place where people and organizations buy, sell, or invest in financial assets. And by place, we don't necessarily mean a physical building. Today, most financial markets operate online, allowing millions of people around the world to participate through the internet. Different types of assets are traded in these markets, including company stocks, national currencies, gold and silver, oil and other commodities, cryptocurrencies, bonds, and other financial instruments. Think of a financial market like any other marketplace. In a fruit market, people buy and sell fruit. In a financial market, people buy and sell assets and investments. Why do financial markets exist? Now, here's an important question. Imagine someone has money, but no business idea to invest in. At the same time, imagine a company that wants to build a new factory or expand its business, but doesn't have enough money. This is exactly why financial markets exist. They connect these two groups. The company receives the capital it needs to grow, and if the company succeeds, the investor has the opportunity to benefit from that growth. You can think of the financial market as a bridge that connects people who have capital with businesses and organizations that need it to grow and create value. Who participates in financial markets? Many people think that only traders participate in financial markets, but that's far from the truth. Almost everyone can be part of a financial market. Participants include individual investors, professional investors, companies, banks, governments, investment funds, and even central banks. Of course, not everyone has the same goal. Some invest for the long term. Some trade to profit from short-term price movements. Others simply want to protect the value of their money against inflation. The main types of financial markets. Now let's look at the 4 main types of financial markets. 1. Stock market. This is where company shares are bought and sold. When you buy shares in a company, you own a small part of that business. If the company grows, the value of your shares may increase as well. 2. Forex market. The Forex market is the largest financial market in the world. Here, people trade one country's currency against another. For example, the US dollar against the euro, or the British pound against the Japanese yen. Trillions of dollars are traded in this market every day. 3. Cryptocurrency market. This market is where digital assets like Bitcoin, Ethereum, and many other cryptocurrencies are traded. Compared to traditional markets, it's relatively new and is known for having higher price volatility. 4. Commodities market. This market is where physical commodities are traded, including gold, silver, oil, natural gas, wheat, and many other raw materials. Why do prices change? One of the most important concepts in every financial market is supply and demand. When many people want to buy an asset and there aren't enough sellers, the price usually goes up. On the other hand, when many people want to sell and there aren't enough buyers, the price usually falls. This simple principle is the foundation of every financial market.
However, prices are also influenced by many other factors, such as major news events, economic conditions, interest rates, inflation, wars and geopolitical events, and even the emotions and behavior of market participants. That's why prices are constantly changing.
Is the financial market only for traders? The short answer is no. One of the biggest misconceptions is that financial markets are only for traders. In reality, many people invest without trading every day. Some invest to build long-term wealth. Some invest to protect the value of their savings. And others actively trade to earn income from market movements. The most important thing is to learn first and never invest without understanding the risks. Now you know what a financial market is and why it exists. You've learned about the main types of financial markets and the basic reason why prices move. This is only the first step into the world of investing. In the next videos, we'll explore topics like the difference between investing and trading, the advantages and risks of each market, and how beginners can get started.
If you enjoyed this video, don't forget to like, subscribe, and turn on notifications. Thanks for watching. See you in the next video.